Most buyers only focus on the monthly payment of a mortgage. They completely ignore the structure of a loan, and that mistake can cost you long-term thousands. If you're thinking about buying or even maybe think you can't buy, there are more loan options than most people realize. At high level, here are the most common types and their requirements. Conventional loans, which typically require 20% down, or you have to pay PMI, something called mortgage insurance. FHA loans, which I would argue are one of the more common types of loans, allow for lower credit scores and lower down payments. VA loans are a special type of loan geared towards veterans and often include zero down payment. And USDA loans are a special type of loan geared towards certain rural areas. The biggest difference between most of these usually comes down to qualifications and down payments. But there are also some less common types that a lot of people don't even know exist. Things like adjustable rate mortgages, down payment assistant programs, hometown hero programs, and even bridge loans to help someone who's buying and selling at the same time make that process a little easier. I like to work with a whole range of mortgage brokers and lenders so that I can fit the best situation for every client I work with. I do this because sometimes what feels impossible actually isn't. This situation is different, and a great agent will ask enough questions to know this and be able to point you in the right direction and make introductions to the right resources. Because the loan you choose affects your flexibility, your cash, and your long-term cost, not just the mortgage payment. If you're curious about any of these specific loan types or the other programs I mentioned, or maybe one I didn't mention, drop it in the comments below and I can make a full video in detail on what those are.